Yeah, so at the moment, one of our strongest views within the commodity space is uranium. We feel like there is a both short, medium and long-term bull story within that sector. You know, the spot price of uranium has been trading well below break-even prices for most producers of the commodity for the last couple of years. And this year alone, we've seen 20% of global supply taken out of the market. You know, to put that in context, in 2016, the Chinese took 6% of global thermal coal out of the system. The thermal coal's more than doubled since that time. In 2015, Glencore took out 6% of global zinc supply, and since then the zinc price has more than doubled. So we think, you know, this 20% supply removal is meaningful to the uranium price. On the demand side, we're seeing Japan restart nuclear reactors. We're also seeing very supportive Chinese policy, increasing their electrical generation mix towards nuclear, and that's going to be the long-term driver of that commodity price. Look, at the moment, China are generating 3 to 4% of their electricity via nuclear. There are medium-term plans to increase that mix towards 10%. To put that in perspective, the G20 average is more than 15%. Countries like America are closer to 35%. So we see that mix in an environment where there is clearly a focus on cleaner air in China to be reasonably conservative. And even if we don't see that 10% mix hit at a 5% and growing electricity generation base, we still see that demand and supply going into deficit in coming years. The uranium sector is interesting in that 10 years ago there was 800 uranium stocks globally. Today we can see 30 to 35 genuine either in production assets or economic assets at spot prices. So the investable universe has absolutely decreased in recent times. We've chosen to express our views in some brownfield restart projects both in Australia and Canada. We've also looked at spot price linked financial vehicles such as Yellow Cake in London, where we cornerstoned a recent raising. That's interesting in itself, in that you have financial vehicles now purchasing spot uranium and putting that material off market in warehouses in Canada. That particular stock is now trading at a premium to its NAV, so it is incentivised to raise more capital and buy more spot product and take more product off the market.